Hi there, Teresa Timms, president of TDR Mortgage and Real Estate Group in Upland, California. And I'm giving you a market update, a real estate and mortgage market update in Southern California. And there's quite a bit of news going on right now because we've got historic things happening on several fronts. Let's start with what's happening in the real estate market. So, let me put on my glasses. I can read my chicken scratch. Right now, we have record lows on inventory, and so that's causing a supply problem, right? So when you've gotten a shortage on something and too many people want it, what does it do? Prices go up. That's what's happening right now. In the affordable community, there's multiple offers. If you're a first-time home buyer, forget about it. You're not getting your offer accepted. You can get your offer accepted in new construction. So unfortunately, right now for the first-time buyer that needs down payment assistance, this is literally the first time in my origination career where I have to, unfortunately, advise those people to go to a builder. What else? With rapid value increases and rapid sales price increases, we're seeing a lot more issues on appraisals, a lot more appraisals not coming in, and you might have someone bid on a home and bid 30,000 over, and they actually wind up needing to come in with 50,000. So we're seeing a lot of houses come back on the market because of overbidding, which is interesting. This is going to be a trend as long as there's a shortage of inventory. We haven't seen this type of shortage since, I don't know, since 2011, 12 or so. It's really, really bad right now. And the shortage is largely in the more affordable market, right? It makes sense because a $400,000 or $500,000 house oftentimes has a mortgage payment very similar to that of rent. And so whenever someone can buy a home and the rent is similar to the mortgage payment, well, what do people do? They buy. Okay. The thing that I'm very uncertain of it, and I don't know when this is going to impact us, but don't be fooled by all the rosy forecasts, because the unemployment issue, the extreme numbers of unemployment, and the forbearance, it's going to catch up with us eventually. In what form or what fashion? This is uncharted territory, so it's hard to guess. So when you're evaluating whether or not to buy a home, you have to evaluate it not just based on what you think, like market timing. It's hard to go and market time things. Sometimes people just get lucky and they just have this, luck to buy exactly right or time the market. But you can always count on that adage. If the mortgage payment is similar to what the rent would be by 10, I say that all the time, and I firmly believe that. So in times where you think, in next year, if values are going to go down and you want to wait till next year, what if values don't go down? And, housing is a need. Housing is a specific need that people have. And so if you need a house, buy it. If you need someone to advise you on whether or not it makes sense for you, I'm the person. I'm a mortgage broker. I've been originating home loans in California since 1998. I'm also a licensed real estate broker and president of TDR Mortgage and Real Estate Group. Mortgage loans. Well, this is my jam. Mortgages is what I do primarily, and I could not be any more pleased to report that we are doing 30-year fixed loans at 2.3 with a 2.489 APR. So if you're looking to get into something, your forever loan, you hear forever home, this is going to be your forever loan. This is going to be your last refi. And if you want someone to hook you up and guide you in the right direction, an analysis, sometimes that low rate comes with a cost. Obviously, the APR is more. So getting that low of a rate often costs money. And if you have an advisor go through with you, you want to look at do a cost benefit analysis to see, what makes sense for you on an individual basis. And when you call those big guys and you tell them you want 2.3, you know what they're going to do? They're going to give you 2.3. It might cost 2 points. And they're not going to tell you or give you all these different options and advise you or point you in the right direction. They're not going to tell you, well, don't go into a 30-year. You should go, here are all the options on the 20-year or the 25-year or even the 15-year. So be careful when you're out there talking to the big box lenders. Oftentimes those call centers are staffed with people who've been working less than 6 months in mortgages. So TDR Mortgage, we have over 20 years of experience originating home loans. So pick up the phone and you call us. Let's see what else. Time frames. I think the biggest problem right now, the biggest challenge with loans, and realtors are feeling this because when they get a house in escrow, everything's taking longer. Remember, mortgage volume, because of these, almost everybody in America can refinance. Well, if everybody in America can refinance, then they do. And that's what's happening. Mortgage volume is up over 70%. 70% from last year. Everybody is stretched to capacity. We can't even hire enough people. Did you know that mortgage lenders right now are paying underwriters and processors bonuses to come work for them, and they're paying retention bonuses for them to stay, upwards of $50,000. So it's pretty crazy. So that's the kind of time, that's the kind of environment that we're working in. If you meet certain criteria, there are lenders where we can close your loan 20, 25 days. For other certain criteria, you may need to go to a lender where it takes 45 or 60 days. But if you're working with a true professional that has long-standing relationships in place, and you can be patient, because the bottom line is you want the lowest rate, right? You want the lowest rate. So if lender A, the rate is 2.75 and they can close in 20 days or 25 days, but lender B can give you 2.5, but you might have to painfully sit on the sidelines for 45 days. Well, many times I'm going to recommend that you go with that lower rate. And I think most consumers, they're like, hey, if I have to be patient, I'm going to do that. So we're seeing longer than normal turn times on literally everything. What investment? Okay, so that's mortgages. Oh, I did a non-owner, locked a couple non-owners yesterday at 2.75. So there's pretty like non-owner at 2.75. Highly qualified borrower. So if you're looking to get a quote or anything like that, give us a call. The best thing to do is email Teresa Timms at thesocalloanpro.com. In closing, I think the guidance that I could give people in the market today looking to refinance is to refi smart. Refi smart. You need an experienced originator that can give you all of the pros and cons and point you in the right direction. TDR Mortgage and Real Estate is hiring dual agents. That's a dual agent, someone that does mortgage and real estate. So we got you. If you're looking for a new home, we're hiring experienced originators and realtors. Now I can't read this last thing that I wrote here, but I can tell you that I love what I do. And I'm so grateful for the opportunity that the mortgage environment has given me to help so many families save hundreds of dollars a month. And in addition, guide and help people in this difficult time to get your offer accepted. So I'm a realtor's lender and know how to assist and structure loans when people are up against multiple offers. There's a certain amount of butt kissing that you have to do, and I'm an excellent butt kisser. Okay. All right, so that's all I've got to say. If you're looking to buy, sell, or refi in Southern California, pick up the phone and call me, Teresa Timms, 909-920-3500. Have a wonderful day.